Good evening all, hope you're doing well. This is the last video of the week, so this is like a weekly wrap up. And we were fear, but we're now to caution. The reason for it is that we're slightly improved on the technical scores. We were 40%, we're now 45%. If we dip below 40%, the change will then go negative, and then we'll be fear. So it's likely we'll be fear / caution tomorrow. And we've seen a big move on the EURUSD, and the robot did really well. We had EURUSD sales and it did really well. We had 5 wins, 1 loss yesterday. Today we had 6 wins and 1 loss. I'm really pleased, very happy. And so bring my account history, or our account history, because it's the bot, you know, for QDB customers. And you're all welcome to have access to the bot. You know, it's fully available if you want it. You just need to give me your FX Blue username and not username and password. I just need to know your username. Don't give me your password, and then I'll just simply input your user ID into the website, and then you get access. But yeah, don't tell me your password. All I need is your ID, okay? And then I could just insert that into the sender website, FX Blue. Yeah. So yeah, we had a good week this week, and 106 pips, 85% of the trades were successful. This one hung around for a while. It hung around for 11 hours, well, the two, and they went into profit. I was thinking they would have probably gone to stop loss, but these two triggered after the PAL speech, and they were EURUSD sells, and they held, and we needed us to widen our stops. If you're interested in any change that we've implemented, we've simply gone from 15 pip stop loss to 20 pip stop loss. I think the 15 was maybe just a little bit too tight, and it was really good today. I'm really happy. And so what we've been saying is that we're not welcoming this chart. We don't want up and down, irrational, erratic intraday moves like a seesaw. We want nice moves, like what we've seen, and if we get them, we're going to profit. But we see this horrendous zigzag here, for example, stop, profit, stop. So it's one step forward, one step back, and now we're seeing some nice moves. So it doesn't matter if it goes up or down, we just don't want it to get squished. You know, if you can see, this is like quite truncated, that price action. We want to see nice moves, and then we can get a zigzag, you know, sort of like smooth moves, if you know what I mean, not erratic. See, this whole bit here was compressed like a spring. You can see actually we made a W. In fact, I can come to the daily bulletin. I have to scroll up a bit actually, and this is the thing that I spotted. See that W on the EURUSD? That's when we're 107.57, and you know, what happens is that we make M's. So there's an M here, and then that point is the buy. So there's an M here. See, X, A, B, C, D. D is the buy up to, you know, where you take profit. And then X, A, B. B is important. Resistance. C, D, sell. So when we made an M, the D is a buy. When we made a W, the D is a sell. Okay? And I guess we can talk about the analysis in Discord, because I've made notes, so it just saves me from repeating myself. See, DAX, the way that we've shifted this week, if we continue at this rate, we could go to neutral, and we could then go into positive territory. So next week is going to be absolutely massive for DAX, okay? So don't necessarily enter short now, because we're not there yet. We're still 22%, but we've come way off the lows, and if we see a similar move, we'll be neutral, okay? And also just a little bit technical, that LH, the lower high, is from that. It's actually made a higher high if we look at that, but we're ignoring that. We just made a lower high from that, another lower high, and then what's of note is the selling on the down move, the trend lower. It's very aggressive. Can you see the angle there? Not so aggressive, quite calm, quite panicky. and quite strong. So that's them going long, and that's the punishment box. So they do get respected very well, these boxes. So you can use them to profit. See, by the time that box makes, you could probably be a little bit late. You could probably enter here maybe, and so your stop is going to be quite wide. But they're going to be fairly reliable, and of course you're monitoring the train station every minute, then you wouldn't be late. But it depends on what you're doing. If you're working, you're not going to catch it the second it breaks. But if you're at home, you could probably catch it, and then you could have a nice tighter stop. And down we come. So you can see that would have been about a 6R, probably 5R trade. Having that as a stop loss there. Enter. Okay, so admittedly we did have that big retracement, so you could have had a better, tighter stop even. And down we come. So it's all very naughty. And something I was thinking about earlier today is that things were never like this 14 years ago when I started trading. We wouldn't see so much volatility. And the reason for it, I think, is the amount of retail traders who have come on board, and there's a need to get them out because they cause a skew. And that's the reason for it, because I remember trading DAX, the Dow, US 500, and it was fairly like sane, but now it's a little bit bipolar, it's a little bit irrational, and it's very erratic. And things like this, back in the day, we'd probably seen a nice trend lower, but not this this desperate struggle to avoid the downtrend. We would simply had a downtrend and a nice bottom and up. And this is it's like an urgent need to push price, but it got rejected. So hopefully that's clear. Like, you could have probably entered a trade and you might have got stopped out, you might have made profit, but you could have held on overnight and then you might have done okay. If you hold overnight on something like this, you could easily get stopped out because of the erratic volatility is so intense. So you could probably wake up and go, oh, right, I'm stopped out, or I made profit. Back in the day, your stops wouldn't have got raided because the volatility wasn't as great. So it's definitely something's happened over the 14 years where I've been trading. And I think it's to do with the retail traders, because it's the only thing I can think of that's actually caused a skew. And hopefully you understand why they want the retail traders out as well, because there has to be someone to counter that trade. And if the retail guys are right, then that person who's countering that trade is going to lose money. So they don't really want too much retail involved. So hopefully that's clear. And I know Andy would be quite happy. We call him Andy Dax. So if this falls, then that would be good, because he's got a short position. I think it's around 18,000. So he had a bit of drawdown, but hopefully he's going to do okay. So well done to him. It's a little bit crazy, but he was pretty sure it was going to fall. And the thing is, things do fall. It can't go up in straight lines. EURUSD had a punishment box, and it's the same one as yesterday, so that's of note. So we had this very thin box. It's a little bit strange, I have to admit. It's really weird, and we're still in play. We're still below it. So the EURUSD is a little bit suspicious, a little bit fishy. Now I think what's the thing that if you're bearish DAX or Dow, this is going to be a little bit of an issue, because this doesn't look particularly bearish, and this may hold up. This may prevent the indices from going into freefall mode. If the S&P is strong, then it can lend weight to the other indices. If this was looking really heavy, then it would be a bit of a sort of panic, alarm bells. But this looks quite strong. Admittedly, we've had the sell set up, but look, 21%. We're not really that extreme. This is where DAX is now, but DAX was really, really extreme. So with any luck, we see continuation. I don't know what's going to happen next week. No one knows. But if we see some continuation, we're going to be risk off, and that'll be good, because we need some healthy market dynamic. We can't have up, up, up. It's just ridiculous. It's stupid, really. Gold. And this is interesting. We had like a change of heart. So sell, they sold, that point, that candle, it threw them off, and they're like, no, this is definitely bullish. This massive candle, I can't be short, and no way, it's too dangerous, too risky. I'll have to sell, and no, I'm gonna have to buy. Sorry, because they were selling, and this threw them out, and it probably kicked them out. And so what's happened is that they've tried to buy, and they might have got caught, and down we come. So hopefully that makes sense. So they were selling, and then that candle had basically kicked them out. And if they had wide stops, then they might be okay. They might have got stopped out. The thing is, they can hedge as well, so they might be undergoing a lot of drawdown. They might have some positions down 2,200, 2,100. You just don't know. Well, you can look at the order book. Admittedly, we could look at that. And what I'm thinking about next week is that we can look at the order book, I think, because we're not really looking at FX as a SI indicators much, so we should, and they're fantastic. And it's also worth noting Nick's analysis as well. It's really good. He's doing videos for us, on a somewhat frequent basis during the week, and whenever he does it, it's really good. He's using the NES indicator and the standard deviation to get like volatility bands, and he's doing okay, and it's really useful. So he's using the FX as a SI indicators, and I think we'll start using it as well next week. No reason why not. It just makes the videos a bit long, and I don't really want to have like really long videos. If they go up to like 18 minutes, no one's got 18 minutes to spare. So just to summarize, we've had a really excellent week on the BART, so really happy with that. And that's a really good return on the day, so I'm very happy with that. And we could be theoretically a little bit risk off next week, but we'll need to see continuation on that herd mentality. And it looks like we might be slightly bearish on gold. And don't forget this website here. This is the CPI FOMC reversal on the dollar, and we're currently third strongest on the dollar. Swiss franc, yen, which is interesting, is second. Then we've got the dollar, it's in third place. The weakest is the euro, the second weakest is the pound. And we can add other currencies to it as well. So I'll add this bookmark to the YouTube video, and I wish you a great weekend. I'm going to be around tomorrow if you need me. I won't mind, and if you want to join us and you've got questions on the sheet, feel free to ask me. And don't forget, we've got a 7-day free trial as well. And likewise, we could talk about the sheet for ages as well. So we could talk about FX, SI indicators, risk appetite, and the spreadsheet, but it'd be like an hour-long video. And it'd just be a bit crazy. So let me know what you think about the FX SSI indicators. We could certainly look at those. We could maybe make a second video, but it's quite time consuming. So I see how we go, and hopefully we're going to see a big reversal, and we're going to get our buyer dip opportunity. So it's going to still take a while. At this rate, it's going to take 15 days at that rate, but you know what the herd are like. They're going to likely sell probably going into the weekend, because they'll have a scary news event, and then they'll sell, and that's what will happen. So that's the weekly wrap up. I wish you a fantastic weekend, and I'll speak to you on Sunday for the COT data and for the daily the Sunday bulletin video. So I'll speak to you soon.